Good morning, everybody. I hope you had a great evening last night. It was a good one here in Wichita. The seasons have changed. The earth is now losing heat. And even though the days can be warm and pretty nice, as soon as the sun starts to go down, you can feel the heat leaving the earth. So fall has arrived, in my opinion. Today starts the FOMC meeting. And in Washington, D.C., there will be 2 days of deliberation. Coming out of the summer, the Fed will really take a hard look at summer economic statistics. They'll try to gauge how that spills over into the fall. And the biggest focus will be on how it impacts the labor market. Since the recession of 2008, 2009, the economy has recovered 7.5%. That's been the slowest growth ever. And 2.5 million workers less in our workforce, even with that increased productivity. So productivity for U.S. companies has increased a great deal. The labor situation will be the focus of the Fed. They'll try to gauge how strong it is and if it's in the recovery or not. The components of the economy that are missing are really the construction industry. And the construction industry is where the uneducated, the lower educated people have gone to make their livings, and nothing is being built commercially that's not built to suit. When you look at strip shopping centers throughout your community, I bet you there's probably more empty spaces than full. When you go to the major malls, there are a lot of stores that are papered over, and there's a lot of turnover in their clientele. So things, real estate-wise, have not recovered and probably won't. The reason for this is the lack of jobs, where our economy is not creating jobs. And I put an article up yesterday that showed out of the 34 major industrial nations, our industrial and tax policy puts us at number 32 on the list. That means there's 31 countries ahead of us that have more favorable tax and industrial policy, which encourages business growth. And you see our Congress and administration howling about what are called tax inversions, moving your company's headquarters to another country. That's a direct result of this tax policy. And the solution of this Congress is to call them names, and they're trying to create a law that outlaws behavior. It does not sound like a dynamic, growing, healthy, capitalist-based economy to me. The present course, it is so reminiscent of previous government failures around the globe. I mean, the initial stages of it, where you try to legislate and pass a law to overcome, the actual reality on the ground. And it can be done for a while. It can be delayed, but economic law will run its course, and eventually the piper is paid. So the Fed's got, my point is the Fed's got their hands full, and my guess is they do nothing. They will, given the impact of raising interest rates on the federal deficit, when it comes time to raise interest rates, I think you'll probably see them take the same tack that the European Central Bank has done. They're going to try to correct the problem with rhetoric, because raising interest rates to the historic levels, which is a little north of 5% for the portfolio, would take our current debt service from $250 billion a year to right under $900 billion. And that would be almost 25% of today's budget. So the Fed's in a really tough spot. So I would guess things will be left unchanged tomorrow. Okay, our financials are up. The FOMC market meeting tends to freeze the market, hold them in a trading range. So we are dealing with a P in the overnight session. and that suggests that we're going to retry resistance and or take it out. So structurally the sell is 13 to 17. I think maybe this high over here in that 16 to 17 area is where the market is headed. They're going to be pulled up to this volume, most recent in the market's memory. So getting short in this 16 to 17 area represents a pretty good trade, but resistance is at 13.5. So we'll make sell 1, 13 to 17, and we'll make sell 2, 19 to 23. On the downside, we've got the value area low at 8.5. We've got a market number at 8. We've got a 2-letter ledge at 5.5. We have the low at 4. So we'll make the buy 4 to 8. Then we get stops beneath 8, and then 1 to 29. Today's news is limited to PPI because the Fed is not raising interest rates to fight inflation. No one will pay any attention to it. It's called unchanged. Core plus a tenth. And then net long-term capital flows. At 24.3 billion. So I don't think anybody pays any attention to these numbers. They might cause a brief little flurry of activity, but I doubt even that. So I look for a trading range today. Basically sellers 16 to 20, buyers 4 to 8. Okay, the knob spread held in overnight, maybe a little wider by 2/30 seconds. The lot of liquidation in call yesterday. That's where the play was. So the last 2 days before the end of last week, call buying was the feature. So this market is pointed higher. We're at 20 right now. We've got this last little rotation up starting in the 24 area, so we'll make 23, 27, sell 1. It's been very easy for this market to get through our sell 1s. And sell 2 will be basically the buck to 04. On the buy side, the breakout came at 12, so 13 to 9 on the buy 1. And on the 1 to 5 will be buy 2. Our number 2 levels are where this market has been able to get to pretty easily. So we'll play for that. Right now you got to get through 20 to make it to our sell band. Now, why might the financials be stronger than equities going into the FOMC? I would have to guess that the Fed and the Fed statement, they're going to be concerned about the economy. They're going to talk about in terms of they'd like to see more growth, or they're a little bit concerned about it, but I don't know that for sure. Okay, I put a diagram up of the current situation in the Middle East. It did not address Ukraine and Russia. The Ukrainian admittance into the European Trade Union's tariffs has been delayed for a year. Ukraine really wanted that to become a part or more closely tied to the European Union. Russia was able to get Germany / the EU to table that. So the Ukraine-Russia situation has really quieted down. Yesterday we began operations against ISIS. You can't win this from the air. Now, Saudi Arabia and UAE, Great Britain and Australia have said that they would join the effort and would supply aircraft to attack ISIS. No ground troops, but you will see the SAS from Australia and Britain and the United States Special Forces active on the ground, but so far the administration has couched their role in terms of advisors, not boots on the ground. We can't, we got all those troops out of Iraq. We snatched victory from defeat, and we are not allowed to talk about it. So there will be special forces operations directly against ISIS, but they will go under the cover of having some Kurds with them or some Iraqis, or perhaps even moderate anti-Assad forces. Tough call. So there will be bombing, and that began yesterday. And there'll be growing reports about how effective it is, but you can't take and hold territory without boots on the ground, and that's the problem with the strategy or the approach to whipping ISIS or putting them back in the bottle. So we came in yesterday knowing that there's pretty good resistance in the 40 area. We did make it up to 43. That was the bottom of our number 2 sell zone. So we're going to be in the same situation we were yesterday. We're basically selling 40s and 45s, 47s. On the buy side, pretty good support in the 35 area. We're at 37, and again, so we'll make 33, 35. Let them test this single print area right here for buy 1. And then the breakout yesterday came from 30, so we'll make 31, 29 for buy 2. And look for a trading range in gold today also. Okay, the euro is holding in pretty well, and the reason euro is holding in pretty well is that the situation in Ukraine is not escalating. It's not getting out of hand. We still like the sell side of the euro longer term. We love the 75 area. Yesterday we left this market wanting to sell 50s to 60s and 75s to 85s. The market opened at 47. Did pause for a while at 50, 55, then rallied up and stopped at 75. So we rejected prices over 70 last night. We're at 54. Four-letter edge is at 63, so we will make 65 to 75, sell 1. 90 to the buck, sell 2. Leaning against 60. 65, 60, 70 is probably where the first sellers will be active. On the buy side, we rejected prices beneath 35, so we'll make 30 to 40, buy 1. And buy 2, we'll make 10 to 20. Hasn't been very difficult to get to our number 2 levels on the sell side. I think that will be the case today. So I really see this 70, 65, 75 area as pretty stout resistance getting started. When you look at the distribution, it's a D, pretty balanced. That's about as symmetrical as they come. If you want to see what a symmetrical or a D pattern looks like, print the overnight session of the euro, and you've got it. So we got volume moving a little higher as it notches up right now. So the market is testing the upper end. Obviously, this low volume area right here from 95 to 30.05 is your best resistance area. So I look for a quiet day here. They will hinge on tomorrow's FOMC announcement. It directly affects what happens in Europe. Okay, crude does not dance to the same drum that gold, the euro, and for treasuries dance to. It's a little bit out of that circle as it really does dance to it, but it does the opposite of what you think it should do based on the news. So right now you can see that resistance has moved down to this 93, 93.50 area, and there's probably good support just below 92, so 92, 92 and a quarter will be buy one. Like to get that done against the buck, the 91.50, 75 buy two. Not afraid to sell into 93, this 75 to 93 will be sell one. It's aggressive. Closer to 93, the easier it is to take, and then 25 to 50 will be sell two. As long as the Sunni tribes west of Baghdad stay with the Baghdad government, the Iraqi oil is secure. If they throw in the towel and join ISIS, then the Iraqi oil is not secure. And that'll be the key, what happens west of Baghdad, in my most humble opinion. Okay, to everybody's favorite market, this market satisfies the masochistic, whatever masochistic tendencies you do have in your personality. It's like putting your fingers in the vise, and we joke about it, but this is absolutely the toughest market to trade, and the reason for that is that any and every game that can be played and will be played is done in the E-mini. There was a report out yesterday about the impact of the CME's new change in trading laws and trading rules, and this person writing the report could see no change in the number of bids and offers pulled when the market was at those levels. So find minds, figure out ways to get around bureaucracies, even if they are privately based bureaucracies, and they know how to play the game. That's why they're as nimble and as successful as they are. So I think we're looking at a trading range. Again, we're going to have a seller 80 to 85 big picture stuff, and we should have a buyer 65 to 70. Stock markets around the globe are off quite a bit. The market is holding at these lower levels. The FOMC meeting tends to produce a rally on its announcement, so the market is going to be lower into this FOMC announcement than it has in the last couple. In the last couple of FOMC meetings, the stock market has rallied into those meetings, so right now it's not. We're going to sit at a low level, so the most money to be made will be to the upside off tomorrow's announcement, and that might bring in some risk-based trading today if we can get the market lower, and I think that's what will provide the support at the 70 levels. So I think the trade's the same as it's been the last couple of days. We're buying 70 plus or minus 1, and then 65 to 67 for buy 2. The overnight high is 77. We rejected price above 78 yesterday. Volume is a little lower than yesterday's, which was lower than the preceding day, which was lower than the day before that. So volume is moving lower in the distribution. So we're at 73 right now. The sell's going to start in the 77 to 80 area, sell 1, and then 84, 86 will be sell 2. And like I said, PPI unchanged, core plus a tenth. No one will pay any attention to it. And cap flow plus 24.3. No one will pay any attention to that. They like to see that money coming into our country, but it's all over the map these days, and it's not. In the old days, it used to be consistent at about 40 billion per month. Why? Because of our trade deficits. Right now, it's kind of spotty. I don't know what it's going to be, but in any event, it's not going to be a factor. Okay, it'll take about at least 15 minutes to get everything up and posted. I'm going to get busy on that. I will see you as soon as I can. Don't look for any reaction on today's news. First news will be up at 8:30 Eastern, and we'll play it from there. I've got a doctor's appointment this morning to start my physical